So YouTube, welcome back. It's Califax here. So in today's video, we're going to talk about market structure. And pretty much we'll just talk about the basics of market structure. We actually go over about a little bit of the concept of complex market structure. We'll talk about trend reversals, and later on in the video, we'll actually do a chart walkthrough, pretty much just to solidify all the concepts that will be talked about here shortly, right? So before I get into the videos, guys, I got to do the disclaimer stuff. I'm not a financial advisor. Any topic discussed here is based upon my own experience and my deep understanding of smart money concepts. So after you watch this video, make sure you backtest the concepts and forward test it using a demo account. If you're happy with the results, then you can move into a live account. All right. All right, let's get into the video. So what is a market structure? Well, we can just take the two words, right? Market and structure. So what is a market? Market is a place where we buy and sell stuff, right? So when we actually bring those two words together, the market and structure, we're pretty much trying to study what is the behavior of the market participants at that particular time in the market, right? So we want to see who's buying, who's selling, right? So for example, let's say the market is pushing to the downside. That means that we have more sellers than buyers. So if we have more buyers than sellers, now we will see the chart price actually pushing to the upside. And so just to give a general answer to what is a market structure, it pretty much is just a framework or a direction, right? Pretty much it's just a framework that highlights the conditions and the sentiments of the market participants at that particular time. Now, what is the importance of market structure? Well, it's one of the reasons why it's so important to be able to understand market structure is because it pretty much help us understand pretty much it just help us pinpoint the best areas so we can get involved in the markets. So if we actually see that the price actually is pushing to the downside, we don't want to buy at that particular time. And being able to also pinpoint the early signs of reversal. For example, we see price pushing to the downside and we want to buy, we want to be able to understand, okay, in which part, how can we look, what are the signs that can pretty much tells us that, okay, now price is about to reverse to the upside and we can get involved in the market. We can buy this particular stock or this particular currency, right? So it's very detrimental to be able to understand market structure because we don't want to get lost, right? In the markets, we want to be able to pinpoint the best areas so we can get involved in the markets. So we can pretty much come to the first part of the video right here. I mean, pretty much the second part, right? Pretty much is just to talk about the basic stuff, right? What are the types of market structure? Well, we have three types of market structure. We have the bullish market structure, the bearish market structure, the sideways. Pretty much, this is just the general topic, right? I mean, we can find it on Baby Peeps, all these sites on Google. But pretty much, you know, just to repeat it again, right? Pretty much just the bearish market structure is just a sections of lower highs and lower lows. Pretty much prices, we can clearly see that the lower highs are violating the lower lows, pretty much just keeping that, right? We're seeing that the lows are being violated, but the highs are being protected, pretty much just keeping that bearish order flow intact. So when it comes to the bullish market structure, we have pretty much the lows taking out the previous highs, right? So we can see that it's associations of protected lows, right? And unprotected highs. Pretty much price just violating the highs, keeping the lows, and keeping the bullish order flow intact, right? So now the third type is the sideways trend, pretty much when price is on a consolidative markets, right? So that means that at this particular time, we don't want to get involved in this particular time because we don't know what is the overall directional bias of the market. We don't know if price is buying or selling. Pretty much at this particular time, we just have a balance of orders, right? Of buy orders and sell orders. And that's a zone where sometimes institutions take up orders, right? If they want to push to the upside, right? So we will see actually an accumulation of orders at that particular area, exchange of hands, pretty much the buyers and sellers negotiating before we actually see a breakout. So whenever we see a price actually in sideways markets, pretty much this resistance and support right here, right? We don't want to get involved, right? Because this is just an area where we're seeing the buildup of liquidity, and we don't want to get trapped, right? So pretty much at the sideways, we don't want to get involved. We much rather just allow the price pretty much to just show its card, right? Allow the market to show its card, so we can pretty much have a definite directional bias, right? So in sideways markets, we actually stay away from it. We let the buyers and sellers discuss, and we wait for the breakout, and then we can establish our directional bias, right? So another topic now, just before I get into it, right? This is just the overall, this is just the simple schematic of pretty much how price works, right? But actually, that's not the reality of it. We can just say, okay, this is the theory behind what is what is market structure, right? I mean, the bullish and the bearish and sideways. But when we actually get into the charts, we actually see that that's not the reality of how price moves, right? It's a little bit more complex. So that's when we will go actually talk about the complex market structure. So now, what is complex market structure? Pretty much, complex market structure is when you bring swing structure and internal structures together, right? On the first part where we talked about the types of market structure, we actually saw just the swing highs, right? Pretty much the break of swing highs, right? And we didn't have internal structures. So when we include internal structures to the picture, that's when pretty much the overall idea of market structure becomes complex, right? For example, let's say this is the daily, right? We can clearly see that, okay, swing highs, for example, at the highest points, right? So we can clearly see that this will be our swing high, and then we will have this low, then we will have this high, then this low, then this high, and then this low. But what happens is that on the lower time frame, there is a lot of trends, right? A lot of stuff going on the inside these ranges, this range high and low of the daily. So sometimes we will see a 1 hour change of character to the downside, pretty much giving a signal that price now is about to go to the downside. For example, right here, we want to see a daily pullback, for example, towards a probably extreme daily supply zone. We will actually have to see a 1 hour or 15-minute change of character to the upside. So that's when the market structure actually becomes a little bit more complex, right? Because the price doesn't move on a straight line, right? So, I mean, I'm just come back here. So we can clearly see that same thing happens on a bullish structure, right? We have this low right here. So this is our swing low, and this swing high, we have a low right here. So if we want to pinpoint, for example, let's say we have this pretty much we have this daily demand zone right here, right? What we want to see on the lower time frame, pretty much, if we go down to lower time frames, such as 1 hour or 15 minutes, we want to be able to look for the change of character. Pretty much just a signal that, okay, price is now about to reverse. So this right here on the lower time frame will be a bearish order flow towards a daily POI, right? So pretty much we can clearly see right here why it's so important to understand market structure, because if you just look at the quotations, for example, of a stock price, you will see, for example, that from last week price was here and now it's down here. So some people will think that, okay, the stock is just being it's losing its value, right? But if you understand market structure, right, pretty much you will see that, oh no, price is just coming to a daily POI, so we can continue the move to the upside. So that's when we actually want to get involved here if we want to buy, right? Pretty much just find that lower time frame signal that, okay, price now is about to reverse push to the upside. So if you see, for example, crypto, probably crypto is coming down to a monthly demand zone, right? So some people are just selling the crypto thinking that, oh, now it's just going to lose all of its value. But if you understand the concept of break of structure, right, from a daily perspective, weekly, you'll just see that, okay, price probably is pulling back towards a daily POI, so then we can buy. So that's how pretty much how market structure pretty much becomes complex once you start to include the internal structures, the lower time frame price action inside the high time frame price action, right? So another topic that I wanted to talk about pretty much is just the trend reversal. And this is, I mean, this is very, very important, because pretty much this is is one of the reasons why it's so important to understand market structure, because we want to understand, okay, what are the early signs of reversal. So let's, for example, we can clearly see right here on the left, we have this bearish order flow to the downside right here, pretty much, price violating the lows, protecting the highs. Now, we can clearly see that our expectation of order flow, right, if price was bearish all along, is to see pretty much price continue to the downside. But when you have the first break of structure to the upside, this is what we call the first sign of bullish intention. Or some people call it chalk, right? That's totally fine. But it's important to understand something. Chalk is never a confirmation of trend reversal, all right? It's just the first sign of trend, because price could just give this break of structure, right? Induce, for example, smart money traders, right, to buy here. And then we could see price actually pushing, continue the move to the downside. So we would just see this as a liquidity grab of this trend line above right here, right? So we can clearly see that a chalk is never a confirmation of trend shift. It's just the first sign of bullish intention. So when we have the chalk, for example, in this particular case right here, we have a first break of structure to the upside, violating the previous trend. This is just the first sign of bullish intention. So what we want to see next is price failing to create a lower low, right? And then we have the second break. So after we have the second break, that's when we have the order flow transition. Pretty much we've transitioned from bearish to bullish. So that's what we call bullish order flow transition, right? When we have the second break of structure. So same thing happens, for example, in this scenario right here, we can clearly see that we had, for example, let me just mark it right here. We have this supply zone right here, right? This supply zone was responsible for taking out this previous low, right? So that's when institutions stacked up sell orders right here to take out the previous low. So what happens is that right here, we had this just pretty much price just blessed through this supply zone, right? There was no reaction, nothing. But if you look at this scenario right here, we can clearly see that we had a supply zone right here. Pretty much price just respected the supply zone. So what was our expectation of order flow here is to see, okay, so if price is respecting that supply, we expect price to at least pull a lower low, right? What happens? This high failed to do its job, which was to take out the low. What happens? Becomes weak, right? So this now becomes a weak high. So price actually breaks structure. We have the chalk, right? So it's not a confirmation of trend shift yet. So we want to see price pretty much mitigating the order block that was responsible for taking out this previous high. And then we want to see the second break of structure, and then we can take the trade from the second break of structure, right? So that's pretty much the general idea surrounding trend reversals, right? We have this first break of structure is never a confirmation of trend shift, right? It's just the first sign of it, right? Same thing happens on a bullish scenario, right? We have this pretty much price taking out the previous highs, protecting the lows right here. But then we have price taking out this previous demand zone. We were expecting price to respect this demand zone right here and carry the move to the upside. What happens? Price actually violated that. So pretty much just violated the previous trend, right? So we have this shift from bullish to bearish. Price, we want to see price mitigating the order block that was responsible for taking out the previous low. And then we want to see that continuation to the downside. Same thing happens when you have this scenario right here, when price is just pushing to the upside, protecting the lows. Then what is the job of this low, right? Is to pretty much pull a high, keeping that bullish order flow intact. What happens? It fails to do its job, fails to take out the high. So this low becomes now weak. Price actually breaks. We want to see price pretty much failing right here, right? Failing to create a higher high. Now it creates a lower low. So this low right here and this low now become, this high, right? And this high right here, now they become protected, right? Because they actually did the job. They took out this low. So now we have, after the second break of structure, we have that bearish order flow transition. Pretty much we have transitioned from bullish to bearish, right? So that's a basic understanding of trend reversal. Now, there is another topic. There is another part about reversals that I wanted to talk about. And this is just pretty much introducing the concept of accumulation and distribution, right? I think some people may have heard this from the Wyckoff theory, right? But pretty much is you have this bearish trend right here, right? Pretty much price taking out the lows, protecting the highs. Then you actually get on a range markets right here, right? Pretty much we have this equilibrium of buy and sell orders right here. So pretty much that's a place where we have this exchange of hands, right? Between buyers and sellers. Now, what happens is that we have this breakout right here to the downside. What happens is that when you have a breakout, what happens? They know that there is a lot of sell side liquidity sitting here because there are people that were waiting for the breakout of that range, and they're not trying to sell, right? They're looking for the break and retest. What happens is that institutions, they had to sell, right, to take out the liquidity sitting below. Then they had to buy immediately to the upside, pretty much trapping all these people, the break and retest traders, right? Then they have to come back into the POI that was responsible for taking out that previous high right here, and then they push to the upside, right? So at the same time right here, this move right here to the downside, they were just trapping all this buy side liquidity sitting here, buy stops that people had here. Now, what happens is that we see price actually pushing to the upside. Then we have another consolidation right here. Pretty much this is just where institutions are taking up more buy orders, right? To pretty much just push price to the upside. So this is what we call reaccumulation, right? Then we have this expansion to the upside. So right here at this point, what we call distribution, that's when the buyers are just liquidating all their positions. They're taking profits, right? They made all their money. Now they're liquidating positions. That's when the sellers come in with more strength. They push price to the downside. We have a break of this range in markets right here. We have a mitigation of the order block that was responsible for violating the previous low, and price just carries on to the downside. So if you look at the charts, right, you will see pretty much this pattern happens. We actually saw that in this particular schematic right here, we just had this reversal from a structural perspective, right? Structure highs and lows, pretty much price just breaking structures, previous structure high and then reversing. But in this scenario right here, now we include the sideways market, right? That's what I was talking about on the first part of the video, right? About the sideways market structure. So right here is just when you incorporate the three types of market structure together. And this actually happens quite often on the markets, right? So pretty much that's it for the schematic explanation of what is a market structure. Now let's hop on pretty much just do a chart walkthrough and see how we can actually incorporate all these concepts. So we can clearly look at here, for example, in GBP USD. So this is a GBP USD pair right here. So we can clearly see that pretty much Euro GBP at this particular time, we can clearly see price action was pushing to the upside, right? We can see these successions of high highs and higher lows. Pretty much price just keeping that bullish order flow intact. But what happens is that price actually got to this point right here. Let me just we had this bullish order block right here sitting below, right? This bullish order block right here was responsible for taking out this previous high and created this high right here. So now what happens? We have this low. What do we expect price to do? What is the job of this low? Is to create a new high, right? So what happens? Price actually failed to close above this previous high. So what happens? This is the first, sorry, this is just the first sign, right? That price actually wants to reverse, right? Pretty much it's just buyers losing strength at this particular point right here. So what happens? We have a break of structure right here. So we have the first break of structure of this low that was responsible for taking out the previous high, but it failed to do its job. So we have a break of structure right here. So we have a break of structure right there, right? So as we know, we always look for the order blocks, right? The last up candle before the down move. So we can clearly see that we have this up candle, right? Last up candle before the down move right here. So we have a mitigation. So we could have set a limit order right there and move price to the downside. Your first target should be to take out the previous low, pretty much just to keep that bearish order flow, right? So this was just the first break of structure right here. that gave us a signal that, okay, price is about to reverse, but this is just the first sign. It's not a confirmation yet. That's why probably this POI was a risk entry for you to take a sell from. So we want to see price actually breaking structure again, pretty much just giving us that confirmation that the trend has shifted from bullish to bearish, right? So now we have that bearish order flow transition. We look at the last up candle before the down move that went on to take out the previous low. It's sitting right here. So we actually mark this as the POI. So we can pretty much take a sell limit right there, right? At this particular order block. Then we have another break of structure right here, right? Pretty much we can clearly see that the bearish order flow has shifted, right? I mean, it's still intact, right? We look at the last up candle that was responsible for taking out the previous low right here. We have the order block sitting above right here, right? Now, what I want to show you guys at this particular moment is how we could have, how can we look on the lower time frame for confirmation that, okay, price now is about to reverse to is all the way to this order block, right? Sorry. So let me just use the bar replay. We can actually come back to this area right here. So we're on the daily time frame, right? So we want to go on the lower time frame pretty much to have a confirmation that, okay, now price is about to reverse. We want to look for that change of character. So we, for example, we can use the 1 hour time frame. We can come right here on the 1 hour time frame. And what we should be doing is we should read the structure, for example, right? We have this high, right? We have the low. Then we have price pretty much making this lower high, right? Then price made a new low right here. We have a high right here. So what is the job of this high? Is to give us a lower low. What happened? Price actually failed to create a lower low, failed to take out this previous low. What happened? We have price reacting at this zone right here. And then we have the first break of structure to the upside. So we can clearly see that right here, we have the first sign of bullish intention, right? So we can clearly see right here that we have this last sell before the buy that went on to take out the previous high. So we can mark this as our break of structure right here. So we can say, okay, this is our break of structure. Now, if you look at this wick right here, what happened at this particular moment? We can clearly see that institutions had to sell to take out all this liquidity sitting below right here, pretty much trapping all these support resistance traders right here, right? So they had to sell, grab all this liquidity and push to the upside. So what do we know about order blocks, right? Price has to do RTO, right? Because they had to sell, then they bought immediately. And institutions, they don't use stop losses when they sell to take out this liquidity. So that means that when they bought, pretty much price, that sell position that they open is a drawdown. They need to come back into the order block pretty much to mitigate their sell positions, a little bit of profit, right? When they mitigate their positions at break even, that's where we have the breaker blocks, right? I actually make a specific video on that very shortly. So we have right here our order block, right? So we have this last sell candle before the up move right here in the form of a wick. So this wick right here means that there is a lower time frame. On the lower time frame, we have a down candle before the up move, right? So soon price actually gets here, we should look for confirmation on the lower time frame, or we can just set a limit order right here. But just to pretty much increase a little bit the strike rate, we can go down to the 15-minute time frame. So we're looking at the 15-minute confirmation inside the 1 hour POI. So we want to look for that change of character, right? So if we read structure, what happened? We had let me just use this tool. So we had this high, the low, right? High, pretty much price printing a new low right here. Then we had the first break of structure, pretty much is the first sign of bullish intention, right? And then we look for the last down candle that was responsible for taking out this previous high. And then we can set our limit order right there, right? So let me just delete this. We can clearly see that our break of structure actually happened right here, right? So we had the break of structure right there. We had our limit order, our last down candle before the up move. So right here, we can clearly see that this right here would have been our order block. So now we can set a limit order right here. We can take this trade, pretty much cover the low, right? For 14 pip stop loss, just to give a round number. Now, what is our target? we're pretty much trying to ride the bullish order flow towards our daily POI sitting above, right? Because we know that the daily is bearish, right? But you may not want to wait, I mean, weeks and months for price to come to your sell POI, I mean, especially on the daily time frame. So sometimes we want to take advantage of this lower time frame opportunities to ride the bullish order flow towards your daily supply zone, right? So we can really take the trade here, pretty much. Let me just go back to 4 hour so we can pretty much see better the daily POI. So we have our daily POI sitting above, so we can pretty much set a limit order, and we're targeting this POI, right? Because this is where we want to sell from. So if I play the replay, so we can clearly see the price actually is pushing to the upside, right? And pretty much this is how we actually, this is the importance right here that I was talking about when it comes to being able to pretty much pinpoint the best areas that we can get involved in the markets, right? We want to be able to understand, okay, what is the what are the signs of reversal? For example, we had this daily break of structure to the downside. We want to see, okay, what are the confluences we need to see in order to pretty much just understand that, okay, price now is reversing, right? Pretty much just pulling back towards the daily POI and then continue to move to the downside. So we actually saw that we looked for 1 hour change of character to the upside, which was this break. Then we went out to 15 minutes just to confirm the reaction increase in our strike rate, right? And right here, for example, this trade would have been a 1 to 35. For people, for example, that have a 9 to 5, this could have been a nice trade to just set and forget, right? Or you could have gone on the lower time frame, such as 1 minute, just to increase even further the strike rate. Now, price actually got into our daily POI. What can we do? I mean, we can go down, for example, to 15-minute time frame. Pretty much just to look for that order flow transition also on the lower time frame, such as 15-minute, right? So we can clearly look at the structure right here. That we can clearly see that right here we had this push to the upside, right? We had the low, then price made the high, then price made the low. What is the job of this low? To create a high if it's gonna keep the bullish order flow intact, right? What happens? Price actually fails to put a high, so this low becomes weak. So we have a break of structure right here. So we had the first sign of bearish intention. We actually see that we had a body closure, we had a small pullback, then we had the second break of structure right there, right? So pretty much the question is, what is our last up candle, right? Or the block right here that we can take to sell. We can clearly look that we have imbalances right here, fair value gap right here. So this actually, and we can see the momentum in this candle right here, right? We as retail traders, we don't have enough money to cause this huge momentum. So we can clearly see that institutions were involved in this particular moment to push price to the downside, giving us early sign of bearish reversal, right? So we have our break of structure, pretty much from a swing structure perspective. So this actually was our high, low, high. Pretty much we had price reacting at this order block right here. We can clearly see we have this reaction right here. So price pretty much printed the low. So the job of this low was to take out the high. It failed, so it became weak. So price came down, took that low. So what is our order block? We can clearly see right here. We can consider that we have imbalance. We have that last up candle before the down move. So now we can set our limit order at this POI. We can give a pretty much a 12 pips just to give a round number, right? Pretty much just to cover the high, give a room to breathe. Now, what is our expectation of order flow from a high time frame, such as daily, is to see price actually taking out the daily previous low, so we can keep that bearish order flow to the downside, right? So let me just go down up to the 4 hour time frame. And so our expectation order flow is to see price actually violating the previous daily low just to keep that bearish order flow intact, right? So we can clearly see that price actually pushed to the downside right there. So this is just the ability just to go to 15 minutes to look for this confirmation is very good, especially for people that don't have time, right? 9 to 5 workers. And you can just take these trades right on a set and forget mode. And and that's how pretty much price works, right? From the higher time frame. Pretty much it's very important so that we actually establish a relationship between the higher time frames and the lower time frame so we can better position ourselves. So right here, we actually saw that we had this daily push to the downside, right? We had this break of structure. What was our first sign of reversal, right? Of the pullback? We had that change of character right there on the 1 hour. So we took a trade, confirmed on the 15 seconds, pushed to the upside. Price got into our daily POI. What do we look for? That 15-minute change of character. That's pretty much to increase the probabilities, right? Some people that don't have time to go to 15-minute, they would have set just a limit order at daily. That would have been fine. But just to increase the strike rate, we can clearly see that we had a much better risk to reward ratio. Well, I mean, that would have been a 1-to-48, right? So that's pretty much how we actually align ourselves on the lower time frame with the higher time frame, right? So we can pretty much see that GU has been heavily bearish, I mean, for quite some time. And we can clearly see that right now, price just releases to the downside right here. We have the same bearish order flow still being intact, right? We can clearly see here the GU pretty much had this low, right, high. We had a break of structure. We had the retracement right here. Then we had the second break of structure. We had a mitigation at this daily POI. We could have gone to lower time frames as well, such as 15-minute to look for a nice confirmation. What we have right here, we have this change of character. Price pretty much reacting there, boom, to the downside, right? So I'll end the video right here, guys. So if you guys like the video, make sure you give me a thumbs up. Leave a comment down below to pretty much let me know if you really enjoyed the video. Make sure to subscribe for more contents, and I'll see you guys next time.